So I was looking at a company to sell put options against, and I ran across HSBC. Now, most banks that I've ever looked at have a ton of debt, and they use that debt and leverage that debt to make more money. But for some reason, stockanalysis.com, which is a website I use to take a quick glance at companies to try to figure out what their financial situation is, has this company listed as having, get ready for it, a net cash position of $50 billion. That's not $50 billion in debt or net debt. That's net cash. It says $235 billion of debt and cash and cash equivalents of 285. Now, when I went to get some more highly defined figures, they didn't match up. They were even more incredible. The shareholders' equity was sitting somewhere around, I think it was 200 billion. The market cap of the company is 160 billion and enterprise value is only 110 billion. So here's some more amazing statistics about this bank. First of all, HSBC is a bank that's based in, I believe, the UK. And so they have a few issues. Of course, the reason why I think it's a little bit undervalued here is because, number one, Britain, the UK, is no longer in the European Union. And so that brings a whole host of issues that this bank has to deal with when it comes to ease of business, etc. Second of all, this bank is very heavily tied to Hong Kong and China operations. They're actually building out their Chinese operations even more. They're trying to hire more wealth managers over there and get their fingerprints on it. They also have lots of equity and loans that are made in China, and China's having a rough go at their economic situation at the moment. So it's understandable why that this bank is under such pressure, given the figures that it's given out. And let me just read off some of these figures, okay? It's incredible. So, number one, the price to earnings ratio is 7.47 at the moment. Forward price to earnings is 6.66. Mark of the devil. Price to sales ratio is 2.43. Not that really matters for the bank there, but price to free cash flow is 4.23. Now, not only that, but that's just the EV earnings because of the cash position are even more incredible, right? EV earnings 4.9. Now, you only see like steel producers, mining stocks, and things like that have EV to earnings that are this high for periods of time. EV to free cash flow, enterprise value over free cash flow is 2.9, which is extremely low, even for a bank. I mean, these figures are just eye-popping here. Obviously the gross margin for the bank is 100% like every other bank. Profit margin 33.96. Really good, even for banks. So I'm looking at their dividend now, and it looks like they've paid dividends for quite some time. They have a really, really solid dividend history. They even increased it in recent years a little bit, their total payout. But not only that, they also have a buyback yield. So normally you might expect a bank like this to give out dividends and just keep their shares the same, but they make so much money they actually buy back some of their shares. So their total shareholder yield is 8.68, buybacks plus dividends, which is very good. Even if you take money on margin here in the United States and you collect that 8.68 total shareholder yield, you can collect the spread, just by owning the stock at this price. So I think it's really attractive. Obviously, the market says that the stock is going to go down, right? They say, all right, we're going to value a little bit under what we think it's worth because China is not going to go good. The relations between the West and China are going to get worse. The bank's no longer in the European Union, doesn't have a chance to grow, etc., etc., etc. And those are all fair criticisms and completely legitimate concerns. And of course, you guys should do your own due diligence before investing into these companies and whatnot. But I'm looking over here at their balance sheet and I'm trying to figure out, okay, I'm going to go on the quarterly and I'm trying to figure out what their situation is with the cash. And it looks like they've been burning through cash a little bit. Sometimes they'll have a quarter where it's up, sometimes down, but overall the trend is down. Over the last 6 quarters, it's gone from 347 billion to 275 billion, which is not a huge shrink, especially given the fact that they've increased things like investment securities at a steady pace. They have $892 billion worth of securities. And Trading asset securities also up to 551. Total investments are growing steadily. Total loans are about the same, maybe with a short dip, small dip. But either way, if you think that Chinese equities are undervalued, which I actually am in the opinion that they are, and HSBC is very heavily involved in that area, then any kind of boost, like if China decides to have a 30% up day on the Hang Seng or something, or Hong Kong explodes, or there's some good news from the region, this bank is definitely going to benefit in forms of valuation. But in the meantime, why not sit and collect that 8.68% or whatever it is shareholder yield and help you pay for your margin? I'm not, look, I'm not suggesting that you should like take stuff out on margin. I'm only saying that because the mathematics would check out theoretically. HSBC, I think, is very far away from bankrupting. It has plenty of cash to burn through, and it has plenty of investments that it can call back in order to make their financial situation a lot stronger. Their liabilities versus assets has been staying really steady for a long time now, which shows me that it's a resilient bank. It's been growing extremely slowly, but still not shrinking. The shareholder yield has not been shrinking. I think that it's a fairly safe place to put your money. It's one of the biggest, banks in the world, not by market cap anymore, probably. It's only like, let's see. It's only 160 billion. Well, it's still one of the largest, 60 billion, 160 billion market cap and 109 billion enterprise value. When I do go to the balance sheet, at least on the website, I have to go look at their financial reports because this data is not very clear to me. I'm just doing like a kind of a preliminary research here, just sharing my findings with you because it sounds a little kind of incredible. So that's why I'm really making this video to share the news as soon as I figured out how undervalued this company is here. I also want to find out why. I've been reading a little bit. I haven't read enough yet, but I think most of it, the reason why it's sitting on these valuations is because the China concerns and political tensions. And of course, HSBC being such a big player is going to be in the crosshairs of any kind of conflict that West and the East may have. So if I go to the balance sheet, I'm getting a little bit different figures here. Okay. So cash and cash equivalents, 275 up at the top. But then when I go to total debt, it says they have $729 billion of total debt. And next is supposed to total it, net cash versus debt. It says $348 billion net cash, which is different than the 50 billion, the summary, like the condensed balance sheet version of stockanalysis.com's data shows. So I'm not entirely sure which one's accurate or why is it not, or if I'm missing something in the way that this website reports the figures. But either way, one thing is consistent is that they are buying back shares and they have the least amount of shares now, at least going back to 2019. But I know that before that, they had even more shares. So they're shrinking their share base. They're returning capital back to the shareholders and they're not really losing any assets in the meantime. So I think that's a very commendable achievement there, especially for someone who's supposed to be in trouble. Buying back such large amounts of shares breeds a lot of confidence in the company. So they've bought back, it looks like, over 300 million shares just in the past quarter. That's not even yearly. So it went from 19 billion to 18 billion 687. So I'm going to look further into this company. If you have any data or if you have anything that you think I should know about this company and you know of it, please let me know in the comments below so it points me in the right direction. I'm going to continue reading through articles and trying to do my due diligence. I'm only in the first, I want to say 10% of doing my due diligence so far. So there's probably a lot of stuff I have missed. But if you know something, if you have some kind of insight, please message below so it makes my job a little bit easier and I can get some opinions. Also, if you have a position in the company, let me know how big it is and as a percentage of your portfolio or account and why you own the company. Or if you sold it, tell me why you sold it. I want to know. I might even be scrolling through some social medias to find out some opinions at some point later tonight. But I'm excited about this find. Let me know what you think, and obviously, comment with any data that you have about it. All right, that's it for now. Peace.